Ladies and gentlemen, welcome to this week's version of Nichols and Dimes, our weekly video series. The quote of the week this week talks about influence. As much as people refuse to believe it, the company you keep does have an impact and influence on your choices. The company you keep does have an impact and influence on your choices. What in the world am I talking about? What does it have to do with your money and the markets? Right now, influence is everything, meaning the Federal Reserve, that private organization that has, dictates short-term interest rates, helps with money supply. They are influencing the stock market in a big-time way. On March 23rd, the S&P was at at least in this downturn, the market bottom. So in other words, from the peak in early to mid-February, the market collapsed over 30% and actually bottomed on March 23rd. What does that have to do with the Federal Reserve? That is actually the day, March 23rd is actually the day the Fed came out and talked about what they were going to do to stimulate the economy and the markets. Literally that day, the market bottomed on March 23rd. Why does this matter? Is because historically when the Fed comes in, the Federal Reserve comes in and supports financial markets, whether it's lowering interest rates or whether it's actually buying assets or issuing loans through banks, the market likes it, meaning the market reacts well, and we have a either recovery, rally, or really we have a stabilization of the economy and the markets. Now, I know a lot of people are asking, why in the world is the market going up? In my opinion, this is the main reason. Since March 23rd, we're a little over a month out from that point. Late April now, the Fed is pumping massive liquidity into the system and buying assets to the tune of a little over $40 billion a day. So obviously the market has reacted well. My main reason, again, is because the Fed is influencing the market by buying assets. Here's the problem. Long term, because there's so much money printed through quantitative easing, through trillions and trillions of dollars, the biggest concern I have is what that's going to do to the purchasing power of our dollar. So really the dollar that we have is going to be worth less down the road, very likely because there's so much money out there, again, printed to help support the financial systems for years and years and years. So trillions and trillions of dollars are being printed right now, buying up assets, propping up financial markets. But again, my biggest concern is long-term, the purchasing power of our currency is going to be severely diminished. So again, if you would like a second opinion on your portfolio, are you in the right assets? Are you participating in this rebound? Maybe you're concerned about the future and what this has on your portfolio. You could send me an email at cnichols@nicholswealth.com or go on our website at nicholswealth.com to learn more. In the meantime, stay safe, stay healthy, and I wish you all the best. Thanks for watching.